Hi guys, welcome to another video by Optionables. My name is Saket and in this video we are going to review the trades taken on 23rd September, which was an expiry day. So recently on community tab we had posted this post where we had done a 3000 quantity short straddle at 37,000, and as we all know that on expiry day there was a huge gap up and Bank Nifty rallied almost close to 700 to 800 points. When this particular incident happened, so right at the opening, we had a loss of close to 4.5 lakh when the markets opened. So later we actually adjusted this position and we got into a profit of close to 5 lakh. It was a pretty interesting trade on how we actually adjusted, and that is what I'm going to share in this video today. So after we posted that post, we got a lot of comments where people wanted us to make a video on the same as to how we adjusted the position. Before moving on to the video, there is one more thing which I want to tell. That is, starting this 27th, so 27th of September, there is a conference happening called as Quantleague. So this is one of a kind which is happening, and people who are industry experts such as Nitesh Narang from Stockmark or Pratik Singh from LearnApp. So all these people will be taking part and they will be teaching you how to build algos and execute this live. So this is one of the kind, and definitely check this out. So you can actually register by using the link below and you will also be getting certain discounts. So do check it out, and now we'll be quickly moving on to the video and we'll try to learn how exactly we did the adjustments. So if you are liking the content on this channel, then do hit the like button, share this video with your friends, as well as subscribe to our channel. Thank you so much for joining. Hi guys, welcome to another video by Optionables. So in this video, we are going to discuss about Thursday's trade. On Thursday, we had put this post and there were many comments asking us to make a trade review of the same. So I am going to explain what exactly happened, right? Since I can't show you the actual trade from the terminal as I don't have the recording, so I would request you to refer this screenshot which is posted on the community tab. So that's the reason I have opened this. So what I'll be doing right now is I'll be explaining what are the trades we took and why did we take the same on a plain whiteboard. And later you can actually open community tab and use this as a reference to understand what exactly happened. So we'll be quickly moving on to the trade part and we'll try to understand how exactly the trade went. So as you all know, on Wednesday we were live till almost 3:15. So post the live session, I had taken a short straddle. So what I had done was I had shorted 37,000 calls as well as 37,000 puts. I had hedged it with 500 points away calls as well as puts. So that is 37,500 calls was the hedge, as well as 36,500 puts was one more hedge. So I had basically created an iron fly. So this is how the payoff graph usually looks for an iron fly. So overall I had 3000 quantity of each of this. That means I had 3000 quantity of iron fly, right? So this particular CE I had shorted somewhere close to 200 rupees. This particular PE I had shorted somewhere close to 170 rupees. And this particular CE I had purchased somewhere close to 50 rupees. And this one also somewhere close to 60 rupees. So maybe around 55-60 rupees, right? So this was the trade which I had taken during the end of Wednesday. So now I will just plot this on Sensibull just to show you how exactly the payoff graph looks like and where exactly our break even comes. So you can see these were the approximate prices, not the exact one. So I had got this very close to 200 and this around 170 and 50 as well as 50. So I will quickly plot this on Sensibull. So short of 37,000 calls as well as puts. 3000 quantity is 120 lots, right? And we had gone long in this as well as this 120 lots. So I'll quickly change the average prices also. So 37,000 puts were shorted somewhere around 170. So this was shorted around 200. So this was shorted around 50 as well as 50. Yeah, somewhere around this range. And the market was more or less trading somewhere over 36,950 on Wednesday end. So this is where the market was trading Wednesday end. So you can see here my break evens back then were 36,738, somewhere around 270 points on the lower side, as well as 37,262, again around 260-270 points on the higher side. But unfortunately for me, you can see the max profit, max loss as well, right? Unfortunately for me, as soon as the market opened, so market shot up quite a lot. So you can see that the market opened somewhere around 37,250 and I expected it to face some resistance coming around 37,300, but within next matter of 30 minutes, it was well above 37,500. So since the market was out of our break-even range and we were already at a loss of 4.5 lakh, I am going to now tell you how exactly we were able to adjust this position. So the most important thing what we have to note here is that you should always have the right position sizing. So the moment you go wrong in your position sizing, you can't recover your losses so easily. So for this particular trade, to short 3000 quantity and buy a hedge, we had used up somewhere close to 20% of our capital, which means we had remaining 80% of our capital free to do the adjustments. Especially when you're doing adjustments on expiry day, you have to be little more careful because the premium what you will be collecting is very low and a small reversal is going to cost you a lot, right? So we will now try to analyze what is happening to the situation, because I know in the worst case scenario, my max loss is 7 lakh, right? So we already saw that right over here. Even in the worst case scenario, my maximum loss was 7 lakh, which meant I didn't have to worry a lot. So I had time to sit and think what adjustments I wanted to make. Again, with this, position sizing matters a lot. Instead of going 3000 quantity, if I had gone say something like 15,000 quantity, my loss would be somewhere close to 35 lakh and I wouldn't be comfortable having such a big loss. But I was okay to have a loss of 7 lakh, which was around 1.7% of the capital, right? So now what we have to focus on next is we have already lost 4.5 lakh. How are you actually going to get this back? So we have 3000 quantity and we have lost 4.5 lakh. So how many points is that going to add up to? That is going to add up to 150 points. So this means that if I can recover this 150 points somehow, I am not going to go to any loss at all. So this whole trade can be still given at a break-even price. And over that, I still have 80% of my capital remaining for me to do lot of adjustments. So I have 80% of my capital remaining and I have to recover 150 points, which means I'll be out of all my losses. So now the market has shot up. It is trading somewhere around 37,500 and I need 150 points into 3000 quantity. So we will just focus on this 150 points. Whatever trade I took after that was all in the multiples of 3000 only. So we'll just focus on the number of points required because anyways we have the 3000 quantity and all trades were taken in the multiple of 3000, right? So first, what we have to focus on is the trend. We know that the market is shooting up. It is almost close to 37,500, right? So what do you expect the market, or where do you expect the market to trade is the next question what you have to ask. Once the market started to trade around 37,500, so it gave me some more confidence that market today might not come below 37,000. Why? Because we saw a lot of unwinding of 37,000 calls. So when people are unwinding 37,000 calls and adding a lot of 37,000 puts, it means that they are not expecting the market to go below 37,000. If they were actually doing that, then they wouldn't have shorted put options or they wouldn't have closed their call options, right? So that's the reason you got an idea that the markets might actually not go below 37,000. So I first started shorting this 37,000 puts at somewhere close to 50 rupees, right? So for 50 rupees, I shorted somewhere close to 3000 quantity, which means now I have already collected close to 50 points and I have to only now try to recover around 100 points because 50 points I have already collected. So as long as the market stays above 37,000, I will be making this entire 50 rupees. Now I gave some more time. There is no hurry to adjust because you know that in the worst case, you will only be losing somewhere around 7 lakh, which you're okay because it is a limited risk and it's just around 1.7% of the capital. Once you adjust, you shouldn't actually have a lot of room to go wrong. So if you're not sure, then there is no need to adjust, right? So now, even though the market was shooting up, I still had my downside at 37,000. And even though I had shorted this, my break even was still coming somewhere around 36,800, right? So because I had 37,000 calls also shorted, I didn't close my calls position till the end. Till the end, I actually had this open. Next, some more time passed by. Let's go back to the charts. So here you can see around 11:15. So market was well above 37,500 and the markets actually tried to hold on to 37,500 right over here and it bounced back. So this gave me little more confidence that markets might find support at 37,500. So what I did now is I shorted additional put options of 37,200. This I shorted around 3,000 more quantity where I ended up collecting somewhere close to 40 rupees. So 35 to 40 rupees, somewhere around 35 to 40, right? So that means I have already collected 50. I have 100 left. Here I have collected 40, which means I have only 60 more points left for not going under a huge loss. So even this more or less would end at 0. So I'll just clear this. Right now what we have done is we had 150 points to cover. First we shorted 37,000 and we collected a premium of somewhere close to 50 rupees. Next we shorted 37,200 and collected a premium of somewhere close to 40 rupees. And after some more time, I shorted 37,300 and I collected somewhere close to 35 rupees. And after some more time, I again shorted 37,400 this time and collected another 40 rupees. So overall, you can see that I had a deficit of 150 points. And here I have collected 50 plus 40, which is 90, plus 35, which is 125, plus 40, which is 165 points of additional credits is what I have collected. And as a lot of put writing started to happen at 37,500 and call unwinding, it gave me more confidence that the market might actually not come below 37,500. And that's when I started going near. So till then I actually didn't go near at all because I always wanted to give some room for reversal. And the plan was very clear. The moment market fell below 37,500, I would square off all my position, whether in a loss or profit doesn't matter. So all the positions would be squared off. So this was the entire idea what I had, and I had collected sufficient credits for us to go to profits towards the end, right? So but later what happened is around 2 o'clock, I had already collected. So all this was trading around 10 rupees, less than 10 rupees. This was around 15 rupees. So most of the credits had already been collected. I had collected somewhere close to 110 points and I had only 50 more points to go. So this time I thought instead of, I could have maybe let this run and I could have collected the full premium. And so I still had around 50 points deficit to cover. So this time I thought, since I had already shorted so many quantity, I couldn't keep on shorting more and more of the same. So I was also running out of margin. I thought, why exactly should I wait for this? I have already collected so much, right? So why should I actually wait for this? Because if the market reverses, again I'm going to go to a huge loss. So this is when I decided I will come out of the entire position. I just have 50 more points to recover into 3000 quantity, which I will be doing next. So I don't have to take this much big risk to recover this particular thing. So not even 50 points, around 40 points is what I had to recover because I had collected 110 points. So I came out of everything at a loss of somewhere close to 1.1 lakh. So I was still having a loss of 1.1 lakh when I came out of all the trades. So from negative 4 lakh, I had come to 1.1 lakh and the time was somewhere around 1:30 p.m. So next what happened is I created 4,500 quantity of short straddle of 37,700 and another 4,500 quantity of 37,800. So this time I had done very close hedging, very close hedging, and I had also placed stop losses for all of these. So stop losses for all of these came in around 200. So I had placed a flat stop loss of 200. I had also purchased the hedge and I had created 4,500 quantity of short straddle, that is PE as well as CE. So after some amount of good decay, we were able to realize somewhere close to 60 points from this particular trade. So 60 into 4,500 is around 3 lakh. So somewhere close to 3 lakh. So as I told you, we were having a negative of 1 lakh and now we made another 3 lakh with this particular trade, short straddle. So overall, we were able to end with a positive of 2 lakh, right? So this was from this particular trade where we actually made a trade which was negative 4.5 lakh into a positive of 2 lakh. So now where exactly did we get the remaining 3 lakh? So if you remember, we had a bull call spread of 30th September. Even in the live trade, I had shown you that. So this particular bull call spread gave us further profits of close to 3.5 lakh, with which we were able to end the day with 5.5 lakh from negative 4.5 lakh. So this is how we came from a complete disastrous day to a pretty good day. And you can see this particular trade was made to go from a negative 4.5 lakh to positive 2 lakh. So we'll just forget about this bull call spread. So that's how we came into a positive 5.5 lakh. So leaving this bull call spread, we were still able to make this position go into a profit, mainly because we had the right position sizing and we had sufficient capital to adjust the position. And this is why it's really important not to put your entire capital in a particular trade, because even if the trade goes completely wrong or completely against you, you can still come out with good profits if you have proper capital to deploy. So that's how we managed Thursday's trade, and that's how we were able to come out of a loss-making position into a profit-making one. So it is not just for this particular trade. So you can do any strategy, and if you're going wrong, as long as you have hedged it and you have a limited risk, you can try to recover and come to profits, right? So with that, we also come to the end of this video, and I hope that you guys have liked this particular video. If so, then please do hit the like button, share this video, as well as subscribe to our channel. And I'll be catching you soon in the next video. Coming to Friday's trade, we had another positive of 2 lakh. So overall for this month, we are doing fairly well, and let's see how that goes. I'll be coming out with a video tomorrow on what positions we carry, what we expect from the market in the coming week. Thank you so much for joining, guys, and I'll be catching you soon in the next video.